Phoenix of the team.
All right, ladies and gentlemen, welcome back. We got another chart talk coming at you. It is September 21st. We waited to do a Wednesday this time because the Federal Reserve just raised interest rates for the fifth time this year. They raised 75 basis points. We're now seeing the federal funds rate between 3 and 3.25%. And we got a pretty wild reaction today out of the S&P. So let's look at what's going on. Let me share my screen. So check out a SPY daily here. These circles I have are from the times when the Fed raised rates earlier this year. And what we noticed was it gave us the 1 day rally. And then two of the times it led to a sustained rally. Then this day. And two of the times it was a fake out move and then headed lower. And today it's looking like, we got that fake out move and we're going to head lower. I'll share a better screen in a second. So here's the SPY action we got today. Very boring intraday. And then, the market comes out and we get the crazy fireworks. So what happened with the Fed today? So we learned that Fed's primarily focused on raising interest rates to curb inflation. They said they're going to be data dependent. What the market wanted to hear was 2023 knowledge. Are we going to be looking to cut rates in 2023? It's pretty much priced in the fact that we're going to raise until year end. So right now we got a 75-point raise. November's looking like a 75-point raise, and then December's looking like a 50, and then we don't know what's going to happen with January and going forward from there. But it's tough to spin this into a positive news. It's just inflation's crushing this market, and the Fed's got to be data dependent in into slowing the pace of these rate hikes. But right now they just have to kind of crush the economy.
Yeah.
Simple as that.
It's funny. I mean, the restrictive was, we were joking in the off chat, like every time he just kept saying the word restrictive.
Drink.
It's like drink every time you hear restrictive. But again, he keeps about avoiding growth names, or he keeps like hinting at, growth in the process, like avoid growth names going forward. I think the big thing on my end, I'll just share my screen for a second, Shake.
Do I have to disable?
No, I should be able to do it. So the big thing on my end that we've been talking about more with the 10-year is kind of exactly what we were expecting. We're expecting kind of this run up into this retest, and I should probably make this red instead of green. We were expecting a run up into this retest with the 10-year, and it to fade, as we often see with most retests, and that's what we're kind of starting to see here. It pushed up exactly to that retest, like as we often expect, and we'll see if the next couple of days if it continues to kind of pull back in and that trend continues. Now, for the past few weeks, we've been talking about how we were expecting this retest and that to kind of coincide with some type of short-term bottom in the market. But given the action today, this is just kind of like a really dirty shakeout move where it pushes just high enough to kind of trap people to kind of chase this high earlier in the day. Now they're fading it down to the lows, where anything, again, above 390 is probably our time to be more risk on. And now we're pushing through lows. It's probably that, like you mentioned, like a month ago, we had that like debate of we hit new highs and new lows, and picking the new lows. That's probably in the cards. Where even though we were expecting that retest of the 10-year and it to fade, and with that, expecting the market to run with that, given some of the, for now, at least the action, from what the Fed news was, we're probably going to see the market probably follow what your expectation was a retest or a shake of this prior low, given this dirty shake of action. But that's kind of my take.
Yeah, this 380 support in the S&P is a pretty big level, but it's just getting dusted right now. It looks like we test these lower areas very soon. These 370, 360. And what's funny is that I had a nice buy in the SPY, the S&P for the long term account, 360. And then when we're at 420 a few weeks ago, I'm like, fuck, I missed it. And now that account is right back down, and I'm ready for that buy.
Yeah.
360, 350. We take out these lows. That's when you start loading in the long term account. You might deal with some pain. You might deal with 10% more to the downside. But, when people start talking, the market's going to lose half its value, that's when we start buying some of the long-term account.
Even just really quickly, just touching back on the retest topic since we were on it with the 10-year. The SPY here, this is another good example. Like this is the prior high in the short term is 420. This is that technical retest. Here is that little push through it, like we were expecting with the 10-year, where people kind of chase through that retest a little bit, but it loses momentum. And now we've seen that subsequent pullback. And that's what this is kind of a follow through that at least I'm expecting in the 10-year, because it's now pushed through and it looks the highest, looks the best, and that's when it starts to fade. But again, the equity market also is fading right now. So that's a different topic. But anyways, want to move into top ideas and good or bad trade?
Yeah, I'm just looking at the SPY chart. Let me share my screen real quick.
There you go.
We're getting criminally oversold. If you look at the 8-day, I use the 8-day as my oh, this is 8-day. Oh, we're not even. Never mind. Here's 8-day. Okay, we're not even that oversold. This is a crazy dive from 430 to 380 we just had. Man, oh man, it's gonna be time to buy this thing soon. But looks pretty destructive out there. What do you want to do? I haven't been really holding anything. I like the uranium long term, but I'm buying like September 2023 calls on it, so it's not really relevant for what we're doing. What I do with the SPY today, there's the one thing that's been tried and true in this market all year: buy the ugly, sell the pretty. So what I do with this Fed meeting, we're hands off until we see the reaction. We see that gross down move from 387 all the way down to 380. My thinking was not a bullish thing at all. We went 387 to 380 in 1, 2, 3, 4, 5 minutes. It's a very, very quick move. I'm just looking for a retracement move, 50% retracement up to this 384. I bought the 381, sold like 383.50. Quick in and out trade. It's a 3-4 minute trade. Couldn't really call anything out. So it's a trader's market. The active traders have to love this action. If you look at the S&P, we just went 387 to 380 to 389 to 378 in 2 hours. That's like fucking sickness. There's a few charts I'm keeping my eye on that are just so strong. Think about what the market's doing right now, and then look at these names. Look at this Cell H. It's got this beautiful cup. Beautiful cup. Where's the cup? All right. We see the obvious. Boom! It's got working on this huge cup and handle. But here, just think about this fact. All right, we see what the SPY is doing. We see what the S&P is doing. Investors are running for the fucking hills. Investors cannot get out of stocks quick enough. But then the name like CELH, CELH, somebody's buying this thing here and keeping it at new all-time highs. Some fund, some big buyer, just like this SWAV. Again, these things are not ready yet, but eventually they will be ready and they'll be the next market leaders. SWAV, Soundwave. This NBIX is another one. Again, these things are turning down with the market right now at highs, but look at this action. Then you look at this NBIX on a longer term. Check out the weekly chart, the base that it's working on here. And again, people are buying this. There's a fund. There's someone with big money keeping these things up, while everyone is running for the hills. NOC is the other one. This is a war name. Began to break out today. Now we got the Putin news of him escalating the war in Russia. Got to keep an eye on that one. And then, this LHX. Now, at least we got, all right. So good news about this LHX. We have a very clear trigger for this trade now today. Gaps up on the war news, tries to push higher, then sells that off of the rest of the market. We know it's within this big consolidation, and we've been waiting for it to give us a clear trigger point. And now look at this. Look at these highs. Boom. Recent pivot high, 237. Today's high, 237. So once it makes a market over that 237 area, that's where I'll be looking to get involved for the macro downtrend break for this name. Again, it's in the defense sector, so that's definitely what we want to see. But keeping a small watch list, keeping the risk tight. Again, bear markets, there's guys like Higgins who fucking kill the bear markets, and he should be very proud of himself. That's amazing what he's able to do. But bear markets are meant, you just survive these bear markets, and then when it's money making time, you want to save that mental capital, you want to save that risk for when it's time to compound, because when all these things wash out and we have that, that when we break lows and it's time to buy, and we see the housing market get crushed and things like that, I'm going to be ready to put major risk on, and I don't want to crush myself in the daily activities in the up and down 20 points in the SPY every day. Just bleeding my eyes and bleeding my mental capital. I want to chill so that I'm ready to make the serious money when it's time. So that's really what I've been up to. I stopped sharing the screen if you want to grab it.
All right. So I actually had a couple of trades this week. Felt like you, Shake. I had some I was actually looking at 15-minute chart for the first time in probably a year. So let me go over a couple of the trades. 1 second. All right, so first one. Okay. All right, so first one, we had this Cisco. This was, again, we were looking for some of these support buybacks. Again, Shake mentioned before, buy the ugly, sell the pretty. This Cisco down here at support could not have been uglier. And it shook out this low. I was keeping it on this 44 level. It shook it out. It came right back. It was a very tight risk trade. I was buying above the high day at the time, which was 44.25, versus the low day, which was 43.75. It was 50 cents risk. This was basically a day trade. Looking for $1, $2 move back into this range. Like trying to buy 44, trying to sell in a 45, 46 versus the low. Did not work. 0.5% loss. Not a big deal. That was failed trade number one. At the same time, I found a support buyback in this Netflix at the same time. Again, buy the ugly, sell the pretty.
There you go. That's the mantra.
Yeah. And this one, again, it was in this, the day prior looked horrible. The neck was about to break down support, looked horrible, could not break through that, this 214 little support area, pushes lower, comes right back. Very tight risk, buying up to 220 versus 215. Get the next day, great follow through. This day again just shook me out, and that was my kind of mistake, trying to make sure I took some money in this trade. I didn't want to give this one back. Like Cisco never really worked. Pretty much ticked me in and then failed by the end of the day. But I want to just hit a single. Shook me out, and this was again. There might have been another member in this, but the plan was to sell into the retest. This the goal was obviously to sell into this. I prematurely got shooken out. I should have kept the original stop. That was my main lesson for this. And exactly.
Wait, yeah. But here's the thing: is like what I've been telling guys, because guys have been mad at themselves for not trading it perfect. I'm doing a lot of these video calls, similar things like that, where you're just looking for a single. Yes, you could have managed it better. Yes, you could have given it, a slightly looser stop, but at the same time, you hit that single. So I don't think you could be too mad. Right now, it's like you got to take your singles, and it's not going to be perfect.
Yeah. And then
I just see a lot of guys doing the same thing, saying the same thing to me, like, "Oh, I wish this happened, this happened, this happened." It's like you got to win. Right now, wins are hard to come by.
Just
take the win and you keep moving.
Yeah. So again, a little, and still, still made, what was it, 2-1? Not that bad, but like you said, not the biggest deal. But again, for trading, it's like it's always bad, no matter what. That's just like how we are.
Yeah.
But anyways, and then what I was saying before about how I felt like you this week was, again, I focus really on the daily, the bigger stuff. I'm not really looking at the intraday charts anymore. But this Microsoft, again, kind of really caught my eye. Again, buy the ugly, sell the pretty. Microsoft had shaken out this support area here this day, and you would expect kind of a bigger breakdown than what it was doing. So when I saw this, and I'll go back to like this 15-minute chart, and again, trying to keep the risk very, very tight here, I was looking for support buyback, and I could see that it was this 245 versus this 240. This was like the range. So I had a much bigger order to buy this 245. And I had like a feeler position to buy off this 242. So I'm risking $2 in Microsoft, 1%. Very low risk given how much this name had pulled back in the last week or something. 270 down to 240. I'm risking kind of $2 down here versus that low, and then looking to add through 245 much heavier. And I had, so I bought it through this 242. It does not break. It doesn't trigger me in. Takes out the low. I take a very tiny loss, that 1% loss in this. And I'm sorry, I might have had a 246 buy stop. So I had a feeler entry, 242 versus 240. It shakes me out here intraday. I take a tiny loss. I leave the 245 buy stop in the bigger position. It triggers me in later in the day, basically at the close, and then shakes me out the following day, which was very frustrating. And then going into this Fed meeting, it basically did both of those. It technically triggered. It technically would have stopped me out again. So this is one of those things, like you were mentioning in the chat, like you're not clicking any buttons, you're not doing anything. And that was the same thing for me. I took the feeler loss, not a big deal. I don't care about 1% loss. The bigger position loss definitely was not the most thrilled about, but that's a part of trading. And then today, watching this post-Fed announcement, it looked amazing at 3 o'clock. It looks absolutely horrible right now. And I'm glad to have done nothing. And now it's looking much more likely that Microsoft is probably going to really smoke this low now, Because you don't really want to be buying any of your support at the retest and it just hangs out there. You can continue to buy.
If you can, yeah, if you can get that price,
Yeah,
you don't want
like
it.
the fact that I was able to I bought 242. And again, even though these trades failed, my ad or the bigger position was on the way up. So I bought 242. I took the stop out. When I re-entered a higher price. Even though I'm near support, I want to buy on the way up, even though I still was wrong. But the fact that the next day, being today, I was able to still buy 240 or 245. You really want I would want to see this thing really go day 2, day 3, up into the 250s, where now it's like this is just telling me that this name needs to just smoke this support area. That's just kind of, and obviously this action, it's not the craziest thing to say because it's closing bearish engulfing. But I actually was pretty active this week, and like you touched on with the mental capital, the last few weeks or pretty much most of them I've been very hands off on the active side and just letting a lot of the more passive do its thing. So for these couple of trades this week, again, Cisco, very tiny loss. Netflix made a little bit of money. Microsoft lost a little bit on that bigger position. I'm still fine. I'm not going to buy Microsoft next week. I'm not going to chase Netflix because I botched a trade. And someone had asked that, would you buy Netflix through 250? And it's like, no, I bought 220. I made some money. I made my single. I'm not going to blindly just buy 250 now because I want to be back involved. The next time it gets to 250, that's a different situation because this will be the fourth major attempt. So that's different. But on my end, probably more active than I've been in a while. And again, top ideas, with how the market closed, I think you definitely touched on a lot of good ones. I do think this JPM in time breaks this breakdown stage it's been in. It's based out for most of the summer. I do think there's 120 in time will be a decent longer term trade, or longer term, relatively speaking, a few months into a year.
Okay.
That's
Type up ENPH. That's one I forgot. How's that looking? Zoom in on that bad boy. Yeah, similar. That needs more time.
nice flag.
That green circle is nice. Wish I had that one.
Forgot. Yes, this was probably one of the pre-market calls. We probably were talking about it, waiting for after earnings, and then that's when it went.
Type up SEDG. Because that's got that level like that. That level before the level. Ooh, that 320. 320. I'll see you at 400 or whatever that is.
Yeah, 320, 370.
Yeah, that's a big chart. That's gonna be early 2023 favorite.
Yeah. So for now, I feel like we're definitely risk off. Wait for this retest, see how much we really shake out this low, and then find those really good support buybacks when everyone's freaking out. Just like, but I think the one last point I want to make, retest on the way up. And even you can kind of see it here. You say this is the first attempt, just trying to find relevant examples, pushes through and then fades. Retests at resistance often can be much more perfect because people aren't freaking out. The stock is retesting highs, the market's retesting highs, everyone's happy. When we retest lows, people are often not as enthused when we're back here. People are freaking out. If it's 2-week lows, market's ending, world's crashing, Fed's going to raise interest rates to 100%. Don't expect this to perfectly hold or have a little shakeout. This is often the times people are going to be the most emotional, and you should expect a bigger shakeout than it perfectly holding. And that kind of goes along with me trying to really bottom pick this Microsoft down here. It probably needs a bigger shakeout before it really turns back up through this level. And that's when you don't get that $2 risk. This was looking at my 242 versus 240, super tight. You almost need that big shakeout where it goes down to 220, shakes everyone out, rips back 240, then you don't want to give it the 20 points. But that's really that time when the name is going to work itself higher. That'll be my last little point. All right, Jake, anything else you want to touch upon?
Ooh, no, this market is getting hemorrhaged into the close. We got SPY 378 right now. Very risk off environment. Keep the trades quick, keep the risk low, keep that mental capital in check. With that, catch you guys next week.